What's up, everybody, and welcome to the first episode of Finance Fridays. This is a new thing I'm starting. I don't know if I'm gonna keep it up, but I'm gonna try. So, today we're gonna be discussing taxes. I know, exciting, right? But I'm actually responding to one of you. So, C. Picasso said, I would like to see some financial videos, tax implications, what type of company is best for a self business like this, LLC, etc. Great video. Thanks for the information. You are welcome. Thank you for the comment. So the way I'm going to do this is I'm going to break up videos into like micro doses, okay? Like little small slices. It may be exciting to just take the whole cake and smash your face in it, right? And just eat the whole thing. But then shortly after you realize like, I'm not feeling too well. I don't even know what just happened. And then you realize that maybe I should have just taken a slice of the cake, ate that, enjoyed it, digested it, and then once that was fully digested, I went back and got another slice. All right, so that's how we're gonna do it. We're gonna break everything down into slices. So, with that said, we're not gonna cover all that you asked, because that was actually a really loaded question, and it might take a few videos to get through all of that. So I have some notes, and I'll leave these notes as a link in the description for you guys to refer back to. But today, we're going to cover just this. All right. So first, let's answer the question. It may seem elementary, but older people are not the only ones that watch these videos. There's a lot of teens, and they don't understand anything about taxes, and school is not teaching them. So first, let's cover what is a deduction. Let's just define that, okay? A deduction is not a tax credit. A lot of people use those two words synonymously, meaning they use the words as if they mean the same thing, but they don't. They're two completely different things. And again, for brevity's sake, we're just going to focus on the deduction. So forget about credits. So a tax deduction, I have it here defined as something that lowers the amount of tax you owe to the government. So a tax deduction lowers the amount of money you owe the government. Period. Now, there are two types of governments, though. A lot of people don't think about this. There is the federal government, and then there's the state government. So the federal government is the entire United States of America. And then you have state government. So the state that you live in is also a part of the United States, though. Fair, right? How do deductions lower the amount of taxes I pay? Well, to do that, I had something all typed out. There's a bunch of numbers that look crazy. So I put together a nice little Excel spreadsheet, which is very clear. It's much easier than a whole bunch of words and numbers together. So here's a very bad example. Okay, a very bad example of how they lower what you pay and what you owe. Okay, so let's read the heading here. Let me get my mouse out of the way. You made $100,000 last year, which put you in a 24% tax bracket. Now, sometimes people say 24th percentile, but it put you in the 24% tax bracket. Let's pause. Now we learn some new information here. What is a tax bracket? So we got to go define that before we can move on. So let's move back here. Go back to Edge. All right. So we're going to go to Microsoft Bing, and you do use Microsoft Bing, right? You watch my videos. I mean, come on. Microsoft Bing pays you to search. Google doesn't do that. You do Bing first. And when you can't find what you're looking for, then you go to Google because they have everything. But Bing pays you. You see this 9332 over here? That's cash money. I'm going to actually search for this again. I'm going to take the S out. And we going, payday. All right. So 2022 tax bracket. Now, I want to teach you something else. You always go to the source to get your information. We scroll down here, we see that it's starting to give us some tax brackets, some information here, but that's from Yahoo Finance. And Yahoo Finance is great, but they ain't the IRS, so we're going to ignore them. Let's scroll down some more. We see taxfoundation.org, and that .org tells you we're a nonprofit. They probably make money. We're a nonprofit, and we're here to help you. But you ain't the IRS. We're going to ignore taxfoundation.org. Here we are. irs.gov. Make sure it says .gov, not .com. .com is commercial. Org is organization. Gov is the government, and people like me, you can't get .gov websites. So irs.gov, that's who you want to get your information from. You see the CNBC? Don't do that. irs.gov, so we're going to click that. I already have it up here. So we scroll down, and once upon a time, the IRS used to put these nice little charts together for you. They obviously not doing that no more. I don't know what's going on, but they making you read, and it does look a little bit intimidating. So here we are. We're going to look under marginal rates, and it's talking about tax brackets here. That's what marginal rates mean. And just to explain the marginal rates, I know we got to explain to explain to explain, and this is why we're doing it in slices. Marginal rates is just saying the margin between tax brackets, like what makes a person pay 12%, then what makes a person pay 22%. The dollar amount, the $10,275 here, between the $41,775 is the margin. It's what's in between, okay? And then the rate is what you pay. Got it? All right, cool. So marginal rates. So it's starting off at the top. It's the top tax remains 37% for individual taxpayers with incomes greater than $539,000. What that just simply means, I'm not going to read all the other ones the same way. If you made over $539,900, you owe 37% of that amount that you made over that. Now, here are the other rates. So we see 35% for incomes over $215,000. 32% for incomes over $170,000. Now, in our example, we made $100,000, right? So that puts us, you see, 24% for incomes over $89,000. So between $89,000 and $170,000, you will pay 24%. Okay. So let's go back to our Excel spreadsheet, and now we understand why. Oh, okay. I see why we're in the 24% tax bracket. Now, let's go over here to our example. Let's say you had 0 deductions, okay, and you made $100,000. You will owe 24%, which gives you a tax bill of $24,000. Or if you have a 9-to-5, you've been paying that all throughout the year. They should have only taken $24,000 out of your check, but we know they took a whole lot more than that. That's why it's called a refund. When you get paid, get that check after you file your taxes, it's called a refund, because you've been overpaying all year. You've paid more than you needed to, and now they're just giving you some of it back. They're supposed to give you all of it back, but are they? Do you know if they are? Why do we even have a system like this? Fair, right? All right, so let's say now, in this very bad example, this is a bad example, it's a horrible example, but this is just to get you to understand how deductions work. Let's say you have $15,000 in expenses or in deductions, okay? Let's just say deductions. I apologize. All right. So moving on down now, you have $15,000 in deductions. So now let's walk through what we owe. So we made $100,000 minus $15,000. That $15,000, be it expenses or what have you, let's just call it expenses right now. To make the $100,000, it cost us $15,000. So because you might have needed to pay for machinery or computers or whatever, so we get to deduct. See where the word deductions comes from? We get to deduct $15,000 from $100,000, which leaves us with $85,000. So now we only need to pay taxes on $85,000 and not $100,000. So now we take this $85,000, and 24% of $85,000 is $20,400, which gives us a difference of $3,600. I didn't write that out, but I feel like I need to show you guys, because everybody's not real quick with the math, and plus I've been doing this already. So 24,000. Oh, this is not a touchscreen. Minus 20,400 equals $3,600 or $3,600. So we get to save $3,600. And that is literally, in the end, that's money in your pocket. Because now you don't have to pay them that. And you were going to have to pay them that in the first place. And again, if you had a 9 to 5 and you've been overpaying, you would get back, and you should get back, $3,600 in this very bad example, okay? Now let me explain to you why this is a very bad example. If we go back here, we recall that this $15,000 made our income now $85,000. Now let's go back to our tax brackets. If we go back to our tax brackets, we see people who made less than $89,000, which is us now, because we have $15,000 in deductions. We don't have to pay 24% anymore. Now we pay 22% in tax. So if we went back here and adjusted this number from 24 to 22 as it should be, that changes it to $18,700. That's slightly more realistic. Again, this is still a bad example. That was just one reason it wasn't bad, because it didn't represent the true tax savings there, because it bumped us down to a different and a lower tax bracket. But this is also a bad example because it doesn't include things like, are you married or are you single, or the standard deduction. It didn't account for that. It didn't account for self-employment tax, which all those things need to be considered. All right, but this is, again, basic for you to understand what deductions are and how they work. But anyway, moving on to the things that you can deduct. It's a lot of them, and this is not a complete list. But let's say you're like, well, Chris, I'm interested in getting those free tools. Like, how do we do the tool thing? Well, here's what you can write off when it comes to that. You can write off the cost of the tools. You can write off the cost of the equipment. Like if you're doing a YouTube video, you write off the camera, the computer, the lighting, any software you use. You write off the outfit that you wore on camera, okay? If you had to go buy the outfit and you wore it for the video, you can write that off. You write off the gas that it took to drive to the store, or you can write off mileage, which I'll make a video on that. Like, should you do the gas or the mileage? It really depends on the vehicle. But the parking, lunch while you out, like while you en route, you go to the store, you think, ooh, that wore me out. I need, some Mortons. I need some Ruth Chris's. That's the tax deduction. And I want to take some friends. That's a tax deduction, okay? Editing, if you bought on a credit card, the interest that they charge you on the card is deductible. Like, it's a whole lot of stuff you could do. Makeup. Like, I know a lot of dudes that do get makeup done for their YouTube videos and stuff like that. Like, all that stuff. Gym membership. If you cut your finger while you were out and need to go buy a Band-Aid, that Band-Aid and the gas to get to the store to get the Band-Aid, all of that is tax deductible. You just need to keep track of all those things. And that's why it's good to have an accountant if you're not going to do the accounting yourself, or at the very least just be organized. You can give them to somebody like Eric, who owns his own tax business. And like I said, I'll refer that link is going to be in the description below. So with that said, that is the video. I hope it was helpful. And again, it was kind of long, and this is exactly why we can't do these super deep dives, smashing the cake in our face. Simple things take a long time to learn. I mean, I went to school for finance and economics, and I've been doing business consulting and strategizing for companies, million-dollar companies, billion-dollar companies for years. That's how I know the stuff. I definitely can't teach you all that in one video, or 2 or 3 or 10 for that matter. So anyway, that's the end of this video. Hopefully it was helpful. If you have questions, ask them, and then I'll answer them next week at the beginning of that video, and then we'll dive a little bit deeper, and then we'll continue to keep diving a little deeper. Then you learn something else, we'll put it together, and then we'll see how those things could be put together to make a big business. All right, so anyway, with that said, I'll see you guys next time. Thanks for watching. Bye.